Yeah, good morning, everyone. Uh, we had seen some cool off happening in the US market after sharp decline before that. Uh, Even the futures of the US market are a bit positive. The Ukraine and Russia, uh, Ukraine and Russia interaction is continue, and still some positive news has not yet come out. But things as it get delayed, people may feel some comfort that there could be some diplomatic outcome. Even Asian market are seeing marginal down of less than 0.25%, and some markets are even flat also. So overall, after a very sharp sell-off, we are seeing some cool-off impact happening in this today's trade across the world. Apart from that, even if we see the commodity, the oil is nearing to yesterday's level of around $96, and aluminum is also up by around 0.7%, and copper is flat in today's morning in China. But we are seeing some sell-off in iron ore. That is, but is specific to Chinese market, and specifically to cool off the high speculations. The authority over there has put up some margins, uh, some temporary fees which has been imposed by the exchange over there, and that is bringing down the iron ore market over there, and it is down by around 6.5%, and the steel is also along with that is down by around 1%. So in all, looks a bit more of a calmer day, and we may see some bounce back because of that. Now I'll ask the technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we see some sharp downside momentum in the market. We see the Nifty break important support at 17,000 and 17,900 and trade below that level. So we expect today's market little bit pullback rally at downside, but Nifty important resistance and upside is 16,917, 17,000 and an upside. Downside important support place around 16,750 and 16,670 at downside. So we see the this week momentum momentum range is upside is 17,000 and 17,100, and downside support place around 16,660. So we see the this range for Nifty for this week, and we expect bounce back in today's session. So we see the upside 16,970, 17,000, and upside is immediate resistance. If Nifty break that level and close above, then we Nifty trade towards 17,001, 140, 117 and upside. To today we expect positive and a little bit bounce back in upside. Bank Nifty also trading near the managed to sustain 200 DMA, and upside immediate resistance place around 37,380, and support place around 37 for 740 and 3,800 at downside. 37,000 and downside. So we see some positive momentum also Bank Nifty. 36,550 and 36,100 is the next important support zone for Bank Nifty. Nifty Finance also trade below the important support zone, and that comes around 16,800. If again break upside and maintain 16,880, then we see the 17,000 in Nifty Finance. Immediate support place around 16,650 and 16,570 at downside. In stock specific, we see some positive momentum in TCS. Arunda Pharma looks also positive at current level. And negative side, LIC looks weak. Tata Motor looks weak at current level. So these two stock you can keep watch. Tata Motors looks weak at current level. Maybe see towards 440 at downside. Upside immediate resistance for Tata Motors is 490. So keep watch this stock for selling side, and buy side we expect some positive momentum in TCS also. Again, Cummins India looks positive at current level. That's it for technical. Derivative I can carry.
Yeah, thank you, Vikas. See, on the derivative front, looking at the overall open interest, see, on the derivative front, looking at the overall open interest is still average. So this selling that has come up, the follow-up selling is unlikely to come in. I believe PCR OI, which is very, very important, is around the support areas. 0.76 it is quoting at yesterday, and 0.70 is the bottom area that it last made. So very likely you're going to see some amount of bounce coming in only from looking at that. VIX, as I've been saying, it will continue to remain in this range of about 18 or 17 on the downside and about 23 or 25 on the upside. So it is hitting the higher band as well. So that is again a positive. I don't see it going up towards above the 25 level. So, it is at its upper band now, likely to cool off. And, looking at the overall open interest of Nifty options, the best thing is even after yesterday's fall, you did not see the PCR of 17,000 strike going below 1. That is a very big positive. We might just open up today and fire all guns blazing. Very likely we are going to move up towards 17,000 and very aggressively at that. So I believe one should be buying today, and Nifty should move up towards 17,000, 17,100 levels. All indications look, give an indication that all indicators give an indication that Nifty is going to move up. So just buy, and the stop loss for buy should be 16,800. 16,800 is a good support area. If that is broken, probably some amount of selling can come in, but very unlikely that this will be broken very soon. Looking at the data now, coming to the stock specific front, I believe ONGC continues to witness good amount of open interest built up. It is primed to move up above the 175 180 level, so one can buy this stock. The other one is Coal India. Open interest is pretty good in this stock. Longs are there, and there are not many shorts in the system, so they are hedge positions. So definitely, I believe Coal India can move up, toward the 175 180 levels. So look out for the same. The other thing is the banks. Banks have witnessed a lot of selling yesterday, but not many open interest has been built in either of the banks on the short side. That means you can probably witness good buying action today. So very likely the banks will fire up as well. So look out for the same. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Yesterday we did discuss Ashok Leyland results that they were below expectation because of margin pressure. But in the con call, the company said that it expects MHCV segment to lead the recovery. Again, government has emphasized and increased the capital outlay on infrastructure projects. Plus, there is pent up replacement demand with average age of trucks being at close to 10 years. And also the revival in demand in the bus segment with opening up of economy can be a positive thing for the company. FY23 volume growth, if you look, the street is working with an estimate of 50% kind of growth to an extent because of lower base, because we have had 2 waves in FY22. So, but overall trend should be up even for FY24. The volume growth is expected to be 18 to 20%. So, CV segment will do well going forward. Repco Home Finance result was below expectation because of below average asset quality. The credit cost came higher at 2.5% against management guidance, which they have been giving since many quarters of just 50 basis points. Cross NP also increased. So one can avoid Repco currently. Even the the existing MD, which people felt was not very great, he will be going out. So one should actually look who is the next person that is going to join this company, and can, if his background is good, then probably one can have a serious look at Repco Home Finance, because stock is available at very cheap valuation, and it is fully into retail housing only. Manappuram result was below expectation because of decline in NIMs and higher OPEX. We were expecting NIMs to fall due to heightened competition. They had indicated earlier that competition in gold loans is very high. And in order to grow fast, company reduced their yields, gold yields, from 25% to 20% in a single quarter. Which is a big decline. So that no doubt led to increase in loan growth. So quarter on quarter, gold loans grew by 9%. But on the other hand, this strategy has kind of backfired in terms of ROA and NIMs. So NIMs have declined, and ROA has fallen from above 6% to just 4% this quarter. So overall, we feel this strategy is like compared to earlier, strategy, this is inferior one, and clearly the competition on gold loans is visible. So although NPA side, gold and MFI NPAs were stable, but again, because of change in RBI norms, if we look at the housing book, the NPAs have shot up from 6% to 12%. Similarly, on the CV side also, they have gone up. So these kind of abnormalities are continuously being seen in Manappuram, and that is the reason that this stock is trading at a substantial discount to Muthoot Finance. So as a gold play, we feel Muthoot Finance is much better than Manappuram. So one can avoid Manappuram. Thank you.
Good morning, everyone. Rosario Biotech announced their results, and results were below expectations. The sales looks higher because the company had acquired 2 companies in the past. So because of that, the sales looks quite high at 104% growth. However, because of the raw material inflation, the margins have came down to 10.9 versus expectation of 12.3. We expect negative reaction for Rosario in today's trade. JB Chemicals announced their results, and results were in line with expectations. With the change in the management and overall scheme of the company is on track and posting in line kind of a results. Sales grew by 10%, and margins also maintain at 21.3%. Polyplex Corporation has announced their results, and results have improved. We have seen that other packaging companies has also posted good results in this quarter. Polyplex continued the same trend. The company has also declared 35 rupees as an interim dividend. The sales grew by 41%, and EBITDA margins have also maintained around 24.8% versus 16.5% last quarter and 26.6% last year. The share is still trading 12.6 TTM EPS, which is attractive. Vishnu Chemicals announced their results, and results have improved for the quarter. Natco Pharma results were below expectations, and moreover, the revenue was aided by the licensing income. Despite the margins have come down to 18% versus expectation of 27%. Nectar Lifesciences, that's a small company in the pharma space, has posted improved results. Surya Roshni, which is into pipes and consumer durable products, has posted declining results. There's a lot happening in the company. We have seen that there's a lot of top level management changes also, and which is impacting the stock price also. The stock has come down now to 400 from the highs of 600, 700. So this is, we expect the stock to remain muted in near future also. Fermenta Biotech announced their results, and results were declining. Though the sales was flat around 3% with 3% growth, margins were very shocking at 2.4% versus the last year of 24.7%. Adani Wilmar, that is a newly listed company, has announced the results, and results were improved for the quarter. Lastly, IPCA Laboratories announced the results and which were marginally below their expectation. Thank you.
Good morning. So Aisha Motor announced its results. The results are below expectations. Revenue grew sequentially by 28%, but was flattish on a year-on-year basis, which only grew by 2%. EBITDA margin was at 20% as against 21% on a sequential basis and 24% on a YOY basis. The gross margin also decreased by 120 bips on a sequential basis, mainly due to an adverse mix and commodity cost inflation. However, the company expects that the commodity cost inflation will ease going forward, and the company also expects a gradual ramp up in its production in the coming months. The demand is also inching up, and the booking rate has turned positive over the month in Jan and Feb 2022. The two-wheeler industry traction is expected to be good in the 125 cc segment, and hence demand is not a significant challenge for the company. The management also commented that they have commenced the assembly in the third CKD facility in Thailand. Now it has assembly units in Argentina, Colombia, and Thailand. Royal Enfield has been doing well in markets like North America, Europe, Latin America, and Thailand. The company expects a sustainable quarterly run rate of 18 or 19,000 units. Revenue from international markets was mainly led by EU and UK, followed by Latin America and North America. The response to their new product, the Classics 350cc, has been very good with strong bookings and inquiries. The company expects a good lineup of new launches and new products over the next 12 to 18 months. The company saw the commodity cost inflation slowly becoming better. It had taken a price hike of 1.5% in Jan 22 to recover the cost inflation of the third quarter. The company also increased its dealer network with 1,065 stores and 1,053 studio stores across 1,750 cities as on December 31, 2022. The company also gained 2% market share, and the company looks positive in the long term. The stock is trading at a PE of 25.4 times FY23 EPS. Thank you.
Coal India reported results, and results as expected was better than has shown good improvement and even better than expectations. The volume figure, which came earlier only, has come up at around 174.2 billion ton as against quarter on quarter 147 and year on year 154. And similar was reflection in the realization were comparatively higher, and at such prices, as such sales has grown by around 22% quarter on quarter and 20% year on year. And EBITDA margin has also shown improvement to 24% versus expectation of 23.6, and last quarter 617 and last year 22%. So overall results were good, and company has declared interim dividend of ₹5. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.